Ever wondered how your investment strategy could be more solid, more reliable, more golden? Well, let's talk about that. In the world of investments, diversity is the key to success. It's like having your eggs in multiple baskets, so if one falls, you don't lose everything. Now, let's introduce gold into this equation. Gold, the symbol of wealth and prosperity from time immemorial, holds a unique position in the investment landscape. Its value is renowned for stability, often remaining unaffected by the financial turbulence that may shake other investment avenues. It's not just a shiny metal, it's a shield against inflation and currency fluctuations. When economies tremble and currencies waver, gold stands firm, preserving your wealth in its steady glow. It's more than just a commodity, it's a golden opportunity. It's time to add a touch of gold to your investment portfolio. So how exactly do you invest in this golden opportunity? Investing in gold may seem complex, but it's as simple as 1, 2, 3. Let's break it down into 5 easy steps. Step 1 is all about research. You need to understand the gold market. Gold prices are influenced by a variety of factors, including global economic trends, currency fluctuations, and demand and supply dynamics. It's essential to keep an eye on these factors and to be informed about how they can affect the value of your investment. Step 2 involves choosing the type of gold investment that suits your needs. There are several options to consider. You can invest in physical gold, which includes gold coins, bars, and jewelry. Or you can choose gold exchange traded funds, or ETFs, which are investment funds traded on stock exchanges, and they replicate the price of gold. Another option is gold mining stocks, where you invest in companies that mine gold. Each option has its pros and cons, so weigh them carefully. Moving on to step 3, you'll need to select a reliable platform or broker for trading gold. There are numerous online platforms and brokers available, so it's crucial to choose one that's trustworthy, user-friendly, and offers competitive rates. Some examples include Bullion Vault, Gold Money, and AppMex. Check out their reviews and ratings before making a choice. Step 4 is about deciding on the amount to invest. A good rule of thumb is to allocate between 5 to 10% of your investment portfolio to gold, but remember, it's always prudent to only invest what you can afford to lose. Finally, step 5 is making the purchase and monitoring your investment. Once you've bought your gold, don't just forget about it. Regularly check how it's performing and adjust your strategy if necessary. With these steps, you're well on your way to adding a golden touch to your investment portfolio. Now imagine a future where your investments are not only growing, but also secure. Picture this, a world where your portfolio glows with the rich luster of gold, a metal that has been a beacon of stability for millennia. Gold, my friends, is more than a shiny trinket. It's a ticket to a secure future, a hedge against economic downturns, a shield against the storm winds of inflation. Why? Because gold is a commodity that never loses its intrinsic value. Its worth doesn't hinge on the whims of market trends. It's a timeless asset, a tangible symbol of wealth that has weathered the test of time, proving its mettle over and over again. So whether you're a seasoned investor or a novice dipping your toes in the vast ocean of investments, consider gold. It's not just an investment, it's a golden parachute. So, are you ready to start your journey towards a golden future? Don't forget to subscribe to our channel for more investment tips. After all, a golden future awaits.